So ideally, a 2,400 crore top line business making almost 300 crores of PAT, global leadership, entry barrier hai business mein, uh, seems so good. Should it not trade at 10,000 crores market cap? And as opposed to the current market cap of 3,600 crores. Now, is it a dollar bill lying on the road and nobody's picking up thinking, yeah, fake hoga? Or is it a real note, but that's what provides an opportunity? So we need to evaluate that, right? This could be a value trap, uh, and this could also be a great money-making opportunity. So let's see, why is it at this market cap and what is changing? So this has been completely out of radar. I'm tracking this company very closely for more than a year now, tracking it longer, invested for a year now. And in this 1 year, especially with whomsoever I've talked about it, people are not even willing to listen. That is the kind of baggage this company enjoys, I would say. Enjoys because that's an opportunity for those who are willing to ignore that and move on and see the difference. So three very valid reasons why everybody is not even willing to look at it. First, absolute uh, absence of growth for last decade. The demand has been weak. The industry was struggling with oversupply at industry level, and it's practically a lost decade. No growth, no value creation, no interest by investing community, right? That's how it works. Second is, this company was at the verge of bankruptcy in 2018. They had such a fractured balance sheet. Third is, the second generation was fighting amongst each other for control. It was in a very bad boardroom control fight for better part of this decade. And it was a driverless car, yaar. So minority to पीछे बैठे थे सारे, but driver seat पे कोई नहीं था, right? And you don't want to be in a car where there is nobody nobody driving it. अभी वो automatic पे उतना confidence नहीं आया है ना. So nobody wants to be a part of a driverless vehicle. So for these very valid right reasons, nobody was willing to touch this company so far. Now let's see them one by one. What has changed? So before that, let's see how was the last decade for this company. These are segmental numbers for wire and wire ropes. The revenue moved between 1,600 crores to 2,400 crores. Based on steel prices, it went up, it went down. Very steady volumes, I would say, but the absolute numbers moved up and down. How about EBIT, the operating profit from segmental numbers? 270 crores in the beginning of the decade, 277 crores by the end of the decade, as flat as it can get, right? Let's call it a lost decade for Usha Martin and also its promoters and also its shareholders, right? Uh, but what is changing? That's past. How about this decade? If you see, the demand across the board is rebounding. The way commodities have moved in last 1 year, it is mind-boggling. It is impossible to even imagine that in the same year, oil went negative and then it crossed $100, right? And now we have shortage of oil, and everybody has forgotten about ESG. Oil companies are being begged to increase production. OPEC day before said, okay, we'll increase the production. We were supposed to do it by end of the year. Now we'll do it earlier. Mining companies are having the time of their lives, and any and every commodity company is having the time of their lives, right? These are all the companies which use lots and lots of wires and ropes in their production activities. How about infra? US and Europe, the majority of infra is now 4, 5, 6 decades old. They are talking about investing trillions of dollars in rebuilding their entire infra. Real estate globally is doing well after a gap of 10 years. Every time a property is constructed and elevators are put in, you need Usha Martin cables. The category is growing at high single digits. Ports are doing very well. We know that in India. And okay, because of China, there is global export import issues, global trade, but ports will rebound globally once things normalize. In India, they're doing well. How about global supply? That was the industry level demand. How about supply? So, in industries where you have a lot of SKUs, industry size is small, like in this case, 2400 crore का turnover है साल का, 6% market share है globally. What is the total size of the industry? It's nothing, right? It's what, 50,000 crores, just some $6-7 billion, and thousands of SKUs. In such businesses and industries, China is never interested. Same is the reason with BKT, right? Balkrishna Tire, 2400 SKUs है उसके. नो कंपटीशन फ्रॉम चाइना. वो 100 टायर नहीं बनाता. चाइना बोलता है मेरे को मिलियन का लाइन निकालना है, तब बनाऊंगा. मेरे को इकोनॉमीज ऑफ स्केल चाहिए. सो द गुड पार्ट हियर इज हियर टू, इन केस ऑफ उषा मार्टिन एंड वायर रोप इंडस्ट्री, चाइना इज सेल्फ सफिशिएंट. ना ज्यादा एक्सपोर्ट करता है, ना ज्यादा इंपोर्ट करता है. हार्डली प्रेजेंट इन द ग्लोबल ट्रेड, which is good, right? Otherwise, they change the equation very abruptly. Korea is a large player, but they have higher steel prices than India. Now, this is a massive advantage. If your largest raw material, which is 60% of your cost, is 5-7% cheaper in India, it is such a big advantage. By selling 2-3% lower, you can outbid your competition and yet make higher money than them. The recent 15% export duty levied on steel in India has led to an 8% correction in steel prices in India. Although global prices have also come down, but has come down by lower quantum than it has in India, widening the gap between steel prices in India and in the global markets, right? I see this as a massive tailwind, not just for Usha Martin. It is for anybody and everybody who procures steel in India, processes it, and then exports it. So your forging companies like Bharat Forge, Forging, or auto ancillaries like Jamna Auto, which buys steel and then makes uh, the Khemani and then exports it out of India. So Khemani is the leaf spring for suspension in commercial vehicles. So anybody who buys steel in India and processes it and exports will have a 5-10% cheaper raw material, and that's such a great advantage in global trade. Now, if you zoom out and see how has the global trade been in steel in over the last 5-6 decades, it's something very interesting. And I want to stop here and share a bit about that, because I personally find it very interesting, and hopefully you will also find it interesting. So steel is extremely polluting, right? And it consumes a lot of natural resources. And so what happens is, when countries are developing, when the economies are still in the development phase, and they just want to increase their size of the economy and fill the global gaps, they are okay producing steel for themselves as well as for the globe, for the other countries, even at the cost of higher pollution. But as they become prosperous, they start uh, they stop exporting steel to the world and just produce for themselves. And over time, they even stop producing for themselves and start importing from countries which are not too bothered about pollution or are behind in the economic prosperity curve. So if you zoom out and go back 30, 40, 50 years, Japan used to be a bigger player in steel. As it became very developed, it stopped exporting and in fact started over time importing. Then it shifted to Russia and Ukraine, and US and Europe kept importing steel and they stopped their own steel mines, steel mills. And then more recently, China was a dominant player from last 2 decades, and it was exporting a lot of steel. It had almost half the world's steel capacity at its peak. And then we know what happened. What happened in the last 3-4 years to stop pollution, to curb pollution in China. They removed the tariff. They removed the incentives they were offering. In fact, uh, they introduced a lot of environmental norms and uh, uh, levied started levying cost on these companies because they were polluting environment. So that's what increased the cost of steel mills in China. A lot of them got shut down also because they stopped getting subsidized power and all that. And that changed the global steel dynamics. I believe this decade belongs to India in that curve. Uh, we have the largest capacities in the world. We are in the top 3 4 in terms of steel, and we have gone through a mega consolidation in last 4 years, from some 12 13 players. Now the top 3 4 players, top 5 players almost control 70 75% of the steel supply, and a lot of them through brownfield are increasing by 15 20 million tons over next 5 years, be it JSW, be it Tata, be it SAIL. And we will have a lot of incremental capacity to fill this gap which China has vacated in global steel trade. And because we have this excess supply, uh, and the environmental cost and those surcharges and all that is still not